Joining us now is Gargi Chaudhuri, Chief Investment and Portfolio Strategist at BlackRock. BlackRock is the world's largest asset manager with over $11.5 trillion in assets under management. Gargi, welcome and always great to see you. So let's start with those geopolitical headlines, Gargi, because they were obviously front and center. Israel, Iran going red hot in the Middle East, but as Julie was just mentioning there, it was green across the screen today. It was risk on. What do you make as a longtime market watcher of that response, of that reaction? Does it make sense to you, Gargi? Do you think investors are being complacent? What do you think?
First of all, good afternoon, Julie and Josh. It's great to be back on here, and thank you again for having me. And, as you both were mentioning, I think there's a little bit of, both of the things that you mentioned are true. Number one, even before some of the de-escalation news that came out, that leaked out this morning with respect to Iran looking for ways to de-escalate, even before that, the markets had roughly stabilized if we looked at the price action overnight coming into this morning. And I think we were maybe looking at two things. Number one, that outside of massive left tail scenarios about Strait of Hormuz and that closing, outside of those tail risk scenarios that obviously would be really bad for oil prices, expectations were that this wouldn't necessarily be such a hit to consumption in the U.S., certainly not such a hit to oil prices moving meaningfully higher. And we have to remember that sort of energy as a percentage of disposable income has been declining. So all of those factors, I think, led investors to quickly focus on what else have we learned over the course of the last 2 weeks that are positive. Number one, benign inflation backdrop. Number two, a Fed that's going to continue to be patient, which is good for the time being. Number three, really strong, very solid AI earnings numbers continuing to come out every single week. And I would say that the market is going ahead and focusing on that for now.
Gargi, is the Fed's meeting this week a market-moving event? Is the dot plot going to be a market-moving event, do you think?
I think that they're going to try very hard to not be a market-moving event this week. So my guess is that the bar for them to, obviously, there's a lot of sell-side notes out there that some are calling for the dot plots to show 2 cuts in 2025. Some are looking for 1. The bar for it to show only 1 cut is actually just two people moving their dots. So it's not that high, but I personally think that the Fed's going to try and give us the same message that they gave us approximately 6 weeks ago, because not that much has changed. If anything, things have changed in the slightly more positive direction, but not yet enough for them to signal a rate cut. So I think the best case scenario for them is retain optionality. It's way too early for them to either signal a rate cut in the September meeting or not to cut at all till December. So just have status quo. Talk about uncertainties that lie ahead. Talk about wait and see, which is obviously something that we heard from them last week. And I'd just say that when you're looking at the S&P projections that come out right at 2 p.m. and before the press conference starts, I would imagine that some of the movements in the growth and inflation projections for the end of this year will continue to move in that stagflationary direction. So get ready for that. Expect that growth will get revised down lower for at least this year, maybe even a little bit for next year, and inflation will more likely than not get moved a little bit higher. So let's us as investors get used to that. But as long as you're used to that, I would imagine that they're not looking to surprise the markets here. We have enough of those market moving events from elsewhere.
So if it's not the Fed, Gargi, as you look ahead now on your radar, what would be what are the potential catalysts for the market? Are we waiting for that big splashy trade deal, Gargi? Or am I waiting for the next earnings season? What do you think?
Yeah, so I think that we always, when we're looking for the next headline, we as investor community look for the negative headlines. I would say that actually I'm looking ahead for some of the positive headlines that can surprise us and continue this, this move in the S&P, this new bull market that we've entered into. So I think that, continuing to see softer than expected inflation prints. We saw that this week that maybe we sort of moved away from very quickly because of the geopolitical risk that followed soon after. But I'd expect to focus on that. I'd continue to focus on the incredible earnings season. By the way, Q1 was almost double of what was expected going in when we look at earnings growth. So continuing to focus on that, I would say continuing to look at what we get from the big, beautiful bill, that obviously we'll get more and more information on that. But anything that, again, removes the uncertainty from the market could be a potential for continued performance. And I'll also say this has been a great year for investors to think about allocating diversifiers in their portfolio. So I would say that this is a good time for investors to, yes, stay invested in what we think large cap, high quality companies, but really this is a good year to also add to international markets, to also add to things like gold and inflation-linked bonds as a way to keep that diversification alive.
So Gargi, diversification, hear you on that theme, which I know you guys have been talking a lot about really all year. But if we are looking on as the glass half full in U.S. equities, and we are potentially seeing more upside here, I guess I would ask, first of all, how much more upside? And what's the best way to play it within U.S. equities?
Yeah, absolutely. So, we think that we can probably continue to see large cap quality equities, and especially those specifically focused around the AI theme, continue to do well. I don't necessarily want to go out and say this is the level of the S&P 500 and this is the time at which we will get there, because none of us know what the next market moving headline is going to be. Which is exactly why that having diversifiers, having some front-end fixed income make a lot of sense in a portfolio. But if you maintain that high-quality equity portfolio with a focus on AI, and at the same time sort of move away from the long-suffering small cap parts of the market that will probably, in our estimate, continue to suffer in a world in which profitability for those companies remains quite low, as well as rates remain high, so that remains challenged. We think that that could continue to be quite a driver of alpha in portfolios. And look, I'd also say that time and time again, we've learned that this is a market which is looking for a new micro narrative every single week. There's something or the other that we're all, as investors, focusing on. Getting used to that and maybe looking at dynamic strategies that are able to quickly rotate and adjust to those new realities, I think, are very helpful.
Gargi, good to see you as always. Thank you so much.
Thank you.